The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. And thanks to our host for a great couple of hours beforehand. Let's hope I can do the same thing here. I'm a little bit handicapped because I have an internet problem with my desktop, working from my laptop. So I'll try to get back online as soon as I can. Let me just say, in fact, while I'm doing this, I just want to check because the lights went on. Is everything back again? I don't know. We'll see. All right. The Dow is down 118 at 16,035. Yep, I guess I can get back on. I'll be there in a few minutes. So S&P is down 22 at 1680. Now, this is going to be very interesting. Comp index down 74 at 4,442. The VIX index is up 1.43 in the 2340 area, and that's really not very good. Once you get into the 22s, you can expect triple-digit down days. But once you start to get to the mid-20s, that's selling pressure, and it's intense selling pressure. For my subscribers, I mentioned that yesterday we had a very interesting aspect to the market because the short-term trading index, Richard Arm's short-term trading index, VIX index, the TRIN index, trying to do two things at once. Just try to get this. There you go. Currently connected to another one. Okay, I'm currently connected to another one, so I've got this working, and I'm going to get to the den. In fact, let me just do this. It'll take me just a few minutes. I'm going to try to get everything working here so that I can just move very smoothly over to the to where we usually are, so I can see the den, I can get all my charts, I can do everything that I normally do. And this is what I wanted to say, that I had an indicator that said that overnight, within 1 to 2 days overnight, there should be a very sharp 9 to 11-point move off the low in the E-minis, and that should translate to at least some strength in the cash index. Sometimes it's a lot of strength. Sometimes it's just by the time the wave actually makes its peak and you start to do your body surfing, the wave is already descended, and it just doesn't have that same kind of force. And that's kind of what we were looking at. Now what's really important about the activity that we're seeing, if the Dow closes under 16,000, I would have to consider that not only is that what I would call bear market material. Oh, I can hear that. Good. Okay, we're over there. Not only would I consider that to be bear market material, but it's that arch or H, lowercase h formation, that is absolutely imperative to try to avoid at this time. That is, the market should avoid it. And if not, then we're looking at a retest going down to the the mid-15,000s again, and that's not really what I want to see, not at this particular time. However, in my service, my opening call, we are the scantest we've been in terms of longs and shorts, and one of the reasons being, I think that selectivity is the name of the game, and as a result, I would prefer to be stepping aside a little bit, looking at potential short positions, adding to the short side, rather than getting too many long. I don't think the long positions are going to work. We do have a couple of long positions, and we actually have some in the commodity area, which seem to be doing very nicely. So now what I'm going to do is that I'm going to tell my engineer that I'm pretty much all ready, and that as soon as we can, I will, when the break comes, I will be going to the headset and getting that part of it all ready. And in the meantime, let me just continue with the numbers. I can do it right here. We've got, there we go, just move that away. So the Dow is down 122 at 60,031. The S&P is down 22 at 1880. The comp index is down 76 at 44.39. As I said, the VIX index is in the 23s. That's quite high. That shows selling pressure, buying pressure for the VIX volatility index, selling pressure for the general market. The E-mini futures are down 24 at 1873. Gold is up 11 at 1138. Gold, I've been talking about this for a while. One of the reasons why we wanted to have a gold stock is because within the context of the general market, the overall market, there's a rotation going on to different sectors. And we've even included a sector that has just it's been in the most horrible bear market as a long position. We went long yesterday. It seems to be holding quite nicely right now, up a little bit. So in the context that we're looking at, if you're looking at the QQQ series, which had a very nice rally from the August low of 84.74 to a new recovery high of 115.75. Pullback, but not like any of the other indices. Almost all the other indices either went toward or broke the August low. And this one held beautifully in the mid. It's right in the middle right now at 100. So 115 high, 84 low, trading at 100.52, down 163. But it's making that arch in the lowercase h in the daily chart not a good sign. And because of it, post the chart. Let me see. So I'm in the let me just do that. Sorry, Albert. I'm going to go right to the chart. I should have done that right away. Wasn't concentrating, but here we are. So for the DEN, the charts are now up. There it is, and that is the QQQ series. You can see this very sharp candle from yesterday, very sharp candle today, and it's taken out the lows of the 27th and 28th. Not a good sign. Hasn't closed under it. So this is a very delicate moment. And when I'm looking at it, I'm looking at the weekly chart, and that says, you've got your arch formation, has already taken out that left side low of 98.75 from back at the beginning of October. Watch out. This could accelerate lower. This is not a time to be a hero. If you are going to go long, I would be very it would be very specific. It would be in areas that have been beaten down and perhaps are starting to show some kind of relative strength in relation to the weakness in the S&P and the other indices, and as well as maybe different sectors altogether in different areas. So now let's do this. Got two things going on here. One is that I wanted to show you the IWM, and I also wanted to just check the DEN. I think, everything, you should be seeing the charts. I believe you should be seeing the charts right. So the IWM is at 98.83, down $1.45. This is way below the 200-period moving average and the 9-period moving average in the 105s. It's at 98.85, down $1.43, down 1.39%. This is just not a good scene. And that monthly chart is suggesting that something spectacular has to happen to be able to get to the upside. I'll be back straight after this break. Down 99, Basil Chapman, Tiger Technician Tower. I'll be right with you with the charts. If you're going to Tiger TV, you'll see them in a moment. I'll be back after this break with the charts and with a headset so I can move my head around. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. Good. Everything's settled. You know, it's an amazing thing with computers. If there's a dot out of place, everything gets messed up. Or sometimes it's just everything was working perfectly. Thank goodness I had some other things to do, so I didn't have any trade on, because even though I've got backup systems and all, the stop I don't think would have gone through because I don't think it would have been active. So what can you do? That was a very lucky thing, and everything worked out. So let's just do a couple of things here now that I'm back. I know there were a bunch of things I wrote down that I want to talk about. I'll try to get to them in a little while. I just want you to have a real quick look to see if this is updated. Yes, it has updated. We made a peak E in the 10-minute chart, plunged down from the 1910s. These moves are unbelievable. The 20, 30-point moves in the E-minis overnight to intraday is just a spectacular thing. 1865 was the low. We're now trading at 1881, trying to get back. Now, I'm not sure whether it was a news event that took us down or not, but what I do want to say is that within the context of all the moves that we've looked at, check out this chart right here. Not this one here. You see the VIX index went to 2770. That is way higher than what I would normally have expected from a market down just 100 and something points. Something's wrong with that picture, and I think there's going to be a little bit of a bounce here, and we'll see what happens. I'm not being overly optimistic. I'm saying I think there's going to be a bit of a bounce. How it holds is going to be very important. But look, we're just within the context, like the same move that we saw back here in August, where you bounced up and you came back down. You kept testing the 1600 area until finally you broke out. We're doing the same kind of testing here. I'm not giving up on this market having some internal strength. Believe me, I'm not trying to be Pollyannish. That's why we're light and we're trying to trade more trading. We're still in that long position, I believe, that was bought at 15,650 on the 20th of January. So that's holding well. Let's go to Scott in Safety Harbor. Scott, how are you?
Hey, good morning, Baz. I'm looking for an entry point on Alcoa. It seems to be suffering from schizophrenia. Perfectly
Scott,
healthy body, but the mind is not right.
But Scott, have a look at this. You know, within the context of the market that we're looking at, I kept studying this USX and the stock that you mentioned the other day, CX,
Yeah,
which is,
yeah.
and I kept looking at them, and I have to tell you, this is what I was mentioning on the show when I was doing it remote via my telephone earlier, that there is something going on. The reason why I don't want to give up on the long side in the indexes is that, look, USX is up 58 cents, up 8% right now. So when I said to you just a short while ago that the stocks that have been beaten down in sectors that were just completely out of the market, that have now become to show some strength, I like that. I almost decided that I want to do. I love the action of USX yesterday. Today we did something else. So I'm looking at that. I'm looking at Alcoa. Nice candle. It's trading at 727, up 30 cents. And I'm going to suggest to you that if this is what I would call under the radar stocks. This is why I believe very strongly that actually a whole bunch of things over the last 5 sessions, not 5 sessions, 5 days, have just been, it's like there's a light bulb that went on. Sometimes it's something that percolates in the back of my mind. I can't pinpoint it. I don't know what it's doing its homework. And suddenly, pop, the light goes on and I say, oh my goodness, that's what's going on. I think I've got a feeling
my
now.
take on it was the fact that, what you're saying, along with what you're saying is people ask me when I tell them, I would recommend Alcoa, but I say, well, look what's happening. It's staying down. And my theory is it's just because the short sellers, it has such strength that every time it takes a little bump, those guys just cash everything out, and it kind of beats the price down, but it doesn't make it less valuable.
Well, that's number one. That's a very good point. But there's something else. I want to do it purely technically. I don't want to do it. If you look at the doji candle, back on the 29th of December at $10.27. AA, folks, is what we're looking at. Alcoa at $7.25 right now, up 28 cents. But it hit $10.27 in December. And then this is a very unusual pattern, both in the daily, and I'm looking at the very same thing that happened in the weekly back from May of last year. Every single week saw a lower low, and it kept doing that until it hit 7.91, I think it was, 7.97 on the low of August. And now it's repeated that same pattern in the daily. It's like a microcosm. It's like a fractal. And the fractal says, doesn't matter the time frame, the pattern we're looking at is almost the same. And now what we're looking at is, within the context of this market, I believe that there are fund managers right now that are looking and looking and looking, and they're saying, what has, for me, a greater percentage upside than the potential risk on the downside?
Exactly.
And so it doesn't tell you how high it can go. What it does tell you is that there's you're from Safety Harbor, and I'm going to say this is like a safety trade, because it's saying,
in my words, exactly, Basil. That's exactly, you hit it right on the head. It's a safety trade. And I hate to use that word cheap or stable or anything or bottom, but I mean, this is Alcoa. Okay.
They are lower price stocks. You see, I don't want to use the word inexpensive, because that's the connotation is a fundamental one, that I'm doing my homework and I'm saying to you, oh yeah, this is a cheap stock. No, this is a lower price stock. There's a big difference. And as a lower price stock, it is still a horrible monthly chart, and the weekly chart is just now trying to repair a lot of damage. But I think that you're right, keeping your eye on this, and look at US. These are the heavy duty stocks. This is United States Steel Corps, and now United States Steel Corps goes way back. It goes back to the turn of last century. And if you're looking at this, you're looking at a stock that, if ever it was beaten down, going to the low sixes just recently. This is from 46 to 6 is a huge difference in price. And I'm suggesting to you that, yes, I think you're absolutely right in your trading. And I would still not get too carried away by trying to hold it too long. But I am going to make a suggestion. If you're in it at a good price for any of these, let's just call it these two, not Alcoa and US Steel, which is the symbol X, I would try to have one little part of it try to see if you can keep it for 3 to 4 days, regardless of what your short-term trading plan is, just to keep taking off profits if it rallies. Because in this situation...
That way I won't get sick. My wife almost demands that I do that because then I get all depressed when I miss a rally.
Right. So
if I got one player in the race, then I'm happy.
And not only that, Scott, I think what you've done is you've identified a stock, because it's real simple. If Alcoa closes under 676, it's not that far away, but if it closes under that, it means, whoops, it's changed its style because it hasn't made this. I'm going to go back. There's the break. So, yeah, I'm just going to say, I think you've got your eye on the prize right now. Don't expect a huge, big thing from it, but these trades are really good for you, and this is your style.
Thank you.
Thank you for calling. That's Scott in Safety Harbor. Folks, I'll be back. Dow's only down 32, but the S&P's down 12. I'll be right back. We're going to be talking about the differences in the different
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I had a question, a very good question. Chris asked, Basil, I'm confused. Would you please explain the trend to me? My understanding is over, and she puts over 2. Actually, I never discussed the number. But it is 2 is included in the number, but I'm not giving the number. It's oversold and look for a gap up, and then I've got a proprietary number which is on the low side, and then there's an immediate rug pull. So would I explain it? I'm going to do this. I'll do a little bit of a paper, and I'll do it for subscribers.
I still will not give the numbers. I promised myself. It's the one thing out of all the techniques I have, I'm just not going to give the numbers. And that's number one. That's on the short-term trading index. This is right here. This is Richard Arms. It's called the ARMS index or the short-term trading index. I happen to call it the short-term. No, it's called the Chapman Wave Trend Gauge when it gives certain numbers. Now, the reason why I'm not going to make a big deal out of it now because I don't want to confuse anyone. If it's very high, what it means is that within 2 days from some kind of a low, it doesn't say immediately the next day you're going to have a big move. It says within 2 days, you're going to have a 9 to 11 point S&P move to the upside. Doesn't sound like much anymore, but believe me, if you're aware of it, it keeps you on your toes for when the turn comes because they can be really sharp to the upside. And it's within 2 days. It's exactly what we saw last night. It happened yesterday. And last night, there was a move in the S&P futures. Look, here it is. Let me go to the 10-minute chart. And the futures went from right there at 810 in the 1920 area down to this morning at 21 hours. Oh, no, that was 20. To last night, it went down to 1885. That is a huge move. And then it had a fantastic move to the upside. I would call this more than 9 to 11 points, going from 1885 to the high today of 1910. That's 30 points, 25 or so points. And now look, there's a little bit of a bounce, actually a pretty nice bounce from the low. So yeah, that's what it means. And what often happens is that overnight you get the big move. And then what happens is it rubs off onto the cash index. And if you look at the Dow today, dollar INDU, the Dow closed yesterday at 16,153, and today's high was 16,255. 255. It's almost 100. Am I right? Was it up 100 points? I can't even remember. Yes, it was. Of course it was. It was up over 100 points early this morning. And and then now it's pulled back. And look there, it's just trying to hug that 9-period moving average in the daily chart. And the MACD is still pretty nice. It's still rallying, and the stochastic still at 75%. I have to tell you something. I'm not as bearish as the more intermediate term bears are right at this particular moment. I want to see it fulfill a little bit more upside, and then we can talk about it. But if you're talking about the Dow, look at this. This definitely looks like distribution at the top. It definitely looks like you've got head and shoulders. There's the left shoulder, there's the head, there's the right shoulder. There's a whole bunch of ways of looking at it. And it's sloping down. It's another thing. You've got a down channel. In fact, it's down at the lower end of a down channel. It's the testing of 15,875 in the weekly chart. The 200-period moving average will be absolutely critical in the next week and a half if that happens. If it happens in the next week and a half, you just have no choice but to become extremely bearish. Why? Because you're going to be filling in the wick of the Roman candle, the second Roman candle. And remember, this is one of the most unusual patterns I've seen for candles in monthly charts, to get an inside Roman candle the second time around when you've made some kind of a pretty serious top. So a whole bunch of things are, I would not say new, but unusual. But the MACD and stochastic tell you that it's one of the reasons why I want to be much shorter on the long side, shorter. I want to be fewer stocks on the long side, unless it's in different sectors completely than the general stock market, maybe commodity or whatever it is. So, that I will, Chris, I will get to that in my update, one of my updates over the next, but maybe on the weekend I'll have a chance to do something. And then the usual question, but a really good one here is, I think Julie wanted to know. Yeah, let me go to this. This is the dollar. TRCCI, that is the Reuters Equal Weight Commodity Index. You see the way it's just started a little leg A here? This is in the weekly chart. It's done this so many times before, but look how much better the technicals are. Look, the MACD is still way up here. It hasn't pulled back over the last few months. And the weekly chart shows that the histogram is almost positive. It's at a minus 0.16. It's one of the better readings it's had for a while. So if it goes positive, that's going to be another good part of the whole smorgasbord of technical tools, and the stochastic is running nicely. It's at 21%. In the weekly, it really needs to get to the 25%, and that's going to say, aha, now I could have a little bit more strength. And if you're looking at the daily, it's made a peak B. Look, A, B, and this index. Oh, I was asked if I could open the charts a little bit more sometimes when I'm talking about them. This is the trading at 370.47, up 4.43. Look, this is the chart, and it's broken trend line to the downside. You know, these trend lines are just beautiful works of art and all that. To tell you the truth, I only use them as a hint. I don't. You'll notice that very seldom do I take the trend line and then I say, oh my God, we've broken out of the trend line, this long-term downtrend line. Why? Because the longer you move to the right, time moves to the right, the greater the chance that at some point you're going to break that trend line. It is what happens after it breaks the trend line that is very important. Look, it almost broke that trend line over there. But it's the stochastic. If the stochastic can hold at 86% or go higher, and the MACD can go higher, you've got the commodity index showing strength. And that's going to be the first time that it's done that since it attempted it for a little bit back in October, September, no, mostly October of last year. And then it failed at a peak E. Now, this is going to be very important because the weekly chart hasn't closed above the 9-period moving average since back in October, the week of the 9th, and October, the week of the 16th, and then it went down. But it hasn't, how can I put this? That's right. It hasn't gone for an A to a B to a C and then a D since, so it hasn't had those 4 peaks higher in the Chapman wave since way back in 2014. Yeah, May of 2014 at 569. It's gone all the way down, 569, remember, it's gone to 351. I would say 200 points down in an index like this is serious stuff. So I wanted to talk about that. I also wanted, I said I'd go to some of the commodities. Look, the gold is doing something very similar. Now, if you're looking at this, this is a leg E. It might have recycled to a brand new E/A. I like to do things step by step. Not going to get carried away. This is where, I know I did this once before. I said, it's not even important whether it's an E. And then I got a whole bunch of emails saying, are you kidding? Every letter is important. You've emphasized that. You've made a big deal about it. Obviously, I have. The reason why I said it's not important is because the MACD is strong and stochastic's at 89%. So it gives me a little time to decipher that and make a decision. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Some real quick questions. Tesla, I had a question about Tesla, TSLA, 176.07 down 671. This is the leg after the downside. It's just hit the 200-period moving average. Remember, that was my longer-term target. We have no position in Tesla. At 171.22, it's just touched that today. The low is already, let me just have a check here. The low is 170.58, so it just nicked it. Is it a trade? To tell you the truth, I'm not sure who this is because it's just a text message. I wouldn't touch it. If you want to play it for a bounce, just start off. I'd rather buy an option. I'd rather buy at 175. I'd rather buy the 185 option, a February option, even a February option, and just say, hey, to heck with it. That's $300, $400. It's either in or it's out. I would not put up big money for a Tesla right now. I think it's looking terrible. It could bounce 189. Well, it's a good percentage gain, 9 points. No, it's more, 14 points. Maybe it could go to 189, the 9-period moving average. I'd just be really careful in this market. This is a very selective market. You can see Dow's up 25, S&P's down 5. So let's get that out the way. The next one was Stone. I don't know what the heck that is, STON. Stonemore, I think it is, Partners LP. It's had a very nice sideways move within the rectangle formation. I think it could try again for the upper side toward the 30s. It's trading at 28.04. It's down 0.87. All I said is that 27.60s, no, the 27s has to hold this week. You really want to see it try to get to 28.75-ish area, and it should do that by Friday. Just make it real clear. But if you're long, I would have some kind of a stop on a position, some part of my position between $27.20 and $27, because if it goes under that, it's going to retest the 200-period moving average, probably at 26.30. On the upside, if you are long, this is not a short at this particular point, not right now. But if it does move back in the next 2 days into the high 28s, then I would just have a trading stop in that very same portion that you would have been stopped out if it went under 28, and just treat it as a trading stop. So you're at least looking at a rectangle formation, maybe a dividend stock, I don't know, but it's trading within a range, and I wouldn't get too carried away. It's still in the range. Next question was IYT, and I'll go to the bonds as well. Yeah, you see the IYT is trying to come back. It's a horrible looking chart. Does it have the strength at 121.73, the iShares transportation average? Is it able to get to a leg D? That's the biggest question, because if it can get to a leg D, 1 penny above 125.53, the high of the first, peak C, and it can do that by Monday or Tuesday, all of a sudden you're looking at the 127.90s as the 9-period exponential moving average and the 130.30 as the 200-period. I don't see any reason why if this rally, this bounce can continue into the close and into tomorrow, I don't see any reason why we don't see some kind of a bounce like that. Bearish weekly and monthly, but the daily is improving. Next question, I want to go to bonds, but I also want to go very quickly to the to USO, which is the oil, because I think that the commodity index is telling me that oil could be dragged up here. I haven't liked it at all. I still don't think it's the place to be, but as a trade, maybe we'll have a look at it in a moment. See, the TLT is making a leg E. I don't think, just from my eye, that I see enough strength at this point to, how can I put this? To say that on the short side, there's all that much to the downside. But I also don't see the strength right at this moment to say that if the stock market does rally from here instead of breaking down, that the TLT will go much higher than where it is at the 130 high today. Maybe it can get to that congestion area into the 131-ish area. But the way I'm looking at it now, I think it's a little bit tired. Let me look at 120-minute chart. Yeah, maybe FG. Yeah, I think there's a little room left on the upside, but I think it's just ready for a bit of a digestion to fill the gap. So I would not be surprised if the TLT slides a little bit over the next 3 days, 2.5 days into Friday's close, as the general market at least tries to stabilize. But I'll make it real clear. At 131.50, I think this stock market becomes more vulnerable. TBT, quick question here. TBT, this is the inverse. This is the short position. This is the ultra short Lehman 20-year T-bond Treasury fund. Oh, look at that. The VIX index just gave a little turnaround at the bottom. The stochastic is attempting a turn, and the MACD histogram is way better than it was when it made that low on the 20th. Okay, let me just be real clear. Looking at the weekly, oh, thank you for pointing that out. Who was that? Oh, that's Mike. Mike, yes, let's look at this. You see, the TBT, I'm going to go to that candles, which is what I normally do right there. And then I'm going to go left side, right side. So this is green. This is pink and dashed. Oops, new. Make it pink, style dashed, color pink. Just takes a moment. Now we're done. And there it is. It came in exactly to the week, I should say. There is a chance that the TBT is about to have a bounce as the TLT is about to slide. I'm just saying a chance. In fact, I'll give you the numbers that would confirm it for me. The TBT trading at 38.38, up 20 cents, after making a low this morning, a nice candle forming at 37.62. If tomorrow the TBT is trading at 38.90 to 39 in the 39s, there's a real good chance it's going to try to tackle the 39.49 9-period exponential moving average. If it does that, then we're looking at the TLT doing what I was just discussing a few moments ago. And then I'm anticipating that the VIX index has made a high. Yes, look at that. The VIX index spiraled up another wick, thin little wick to the upside, 27.70 on the 3rd. That was today. Every day, I mean, we've had such busy days, it's impossible to believe. If the VIX index at 22.29 actually pulls back by the end of the day and goes underneath 21, no, I'm going to be a little careful. If it goes under 21.40, this is still a tough market, so it has to go, it's at 22.38. If it pulls back under 22, there's a really good chance that this market could finally get a little bit of legs to move to the upside. But I'd like to see it all very gentle. I'd like it to be so subtle. I don't want a big spiral to the upside. I'd like to see the S&P, which is down 7, close down only 3 in the general market. The Dow itself closed at about a plus 53. To me, that'll be really nice. Okay? Obviously, if the VIX index at 22.48 closes the day anywhere into the 23.20s, this market is going to retest the lows of just now. That's the way it is. All right. Have I covered? I've covered that. I still don't see. Maybe it's time to look at the XLF. The XLF. Yeah. So the candle that we're looking at here is one of those H patterns, the Chapman wave H pattern. Oh. Just for a bounce. You know, it's not a great looking chart, but as a bounce. All right, I'll do that. During the break, I'm going to look at the XLF. I was asked about JP Morgan. I'll look at that, and I'll be right back. And it's good to have everything working I shouldn't even say it. It's good to have things normal.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or Swim. Next on TFNN.
Hi, folks. We're back. So I'm looking at the XLF, which is the S&P Select Financial Spider Fund. I just need to make it real clear here. This is a very dangerous market. If you're going to, I would suggest that regardless of what the upside potential is, have cash ready. I've been talking about for a year now saying, just build up a little reserve of cash. Don't be afraid to have that cash. Don't say, oh my God, now if the market goes up. If the market goes up, if you've got your core position, let's say you've got funds that you have to keep putting money into every month, or you do put money into every month, then I don't see why building up a cash reserve is a bad thing. Why? There's going to be an opportunity for some of these stocks that you've been waiting for to get them later on. In terms of positions, my feeling has been to try to trade the futures, and actually for 3 days now we've had spectacular moves to the upside from the lows we bought at the low of the day, but we've given them up because the market has been so vicious to the downside. So actually, no, I shouldn't say given up. We've made either unchanged or a little bit of a gain in those, or we have given up gains. And I think I don't see that as a problem at all, because the recommendation is that I'm trying to keep my subscribers light to the long side, except in niche positions. And those niche positions are very specific. And oh my God, look, the one that we just bought the other day is up huge. It's up 8% just today alone. This is a gold stock. I don't know what the other one is that we bought yesterday. Oh, that's also up nicely on a percentage basis. So I'm going for specific areas, and it's under the radar, the general radar, and that's really what I want to do. I don't see any reason to go out on a limb, buy the Facebooks and stuff like that, unless it's quick trades. When I spoke a short while ago with Scott, we were looking at Alcoa. Alcoa's had a major move to the downside. It just deserves a bounce. United Steel deserves a bounce. And that's the way we're looking. Now the USO, I wanted to bring this up because I said I'd look at I spoke about the TLT and TBT. So now I can go to the USO. United States Oil Fund. This bounce might be dragged up because the dollar is taking a hit. Look, DXY. And there is a correlation very often between there. Look at that. Peak D in the daily chart of the dollar. I think this is a significant pullback that's coming here in the dollar. It could pull back, test the 96s very soon, and even the 95s. So keep in mind that that's going to help. I think it should help the commodities. So the USO, first time I'm going to say, I think that this is the opportunity in 2016. Remember I said that earlier, maybe it was this year. No, I think I said it last year. I said this is the first opportunity, and then it failed. Bam, it tried to run in and failed. This is the first opportunity because of the dollar for the USO, at least to attempt some kind of traction. I wouldn't get carried away. I'd rather be buying strength. Oh, great. If you bought now at 908 and then the thing pops up to 11, you'll say, hey, I should have been fully invested because that was the biggest percentage. It'll be harder to make that percentage after this. But I'm just saying, if you wanted to use your risk reward, just don't get carried away. And you can add to it on rallies, but just be careful. Overnight crude oil can really tank. So this is the one that's a little bit more delicate. It's a little bit earlier in the stage. So I'd say if you want to go into the USO at 9.08, I would maybe buy a little less and have a bigger stop, a stop of 838, and you go in at 909. And if it goes up to 930 or 940 by tomorrow, you can raise that and maybe then add another little position. That, I think, is a much better way. Let it prove itself, and that way you're in the game. You don't want to take a big speculative, as a speculation, you can make a fortune, but you can also lose a fortune. It's very hard to make money back when it gets greater than 8 or 9%. It sits on your head and it stops you from making good trades. Hey, I enjoyed being here. I managed to get back in. I'll be back tomorrow, Thursday. Check out my opening call. I think you'll find it very interesting. Thanks for being here, and see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.